Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We'll have Norm Winsky on at the break, half-hour break from Astro Trends down in Florida. I posted a chart here, folks. This morning, Sarah showed me some of the things that were going on in Hong Kong when the supermarkets bring in food. The people are there with their masks on, and even before they can put them on the shelves, the food disappears. This particular display that you see here, believe it or not, folks, that's not Hostess cupcakes. That is Durex, the most popular condom in Asia. They go faster than anything else. That ought to tell you something, and I don't know exactly what it is. But the most important thing today is that the awards from the Randolph and Mortimer Duke Orange Juice Trading Foundation came out to the trader with the most chutzpah, and it is being awarded to none other than our good friend Bernard Madoff. He is asking to be released early because he's dying of kidney failure. Well, Bernard, I have a news break for you. We're all dying. Some of it just takes longer than others. If they let that guy out, boy, oh boy, that's going to tell you that white crime really pays. One of the guys from the hood could go in there with the fake gun and get 20 years to life for stealing a Hostess cupcake. So that's how the world goes. Well, the market continues to melt up, and we'll see where it's going to go from this level. But we'll do one thing at a time here. Those of you that did the trade and the hold on, just to get this up here. In the Canadian dollar, hang in there. It's hasn't done much yet, but it might. So the thing is, it's a very, very low risk. We'll get this up here and take a quick look at it. And also, that crude oil trade is doing quite well. That made 2.5 handles to start off with, and now whether it's going to continue or not, we'll wait and see. So you make sure you have your stops at break even if you're looking at that. Okay, next one is we have a brand new chart pattern, folks. We owe this to our good friend over in Las Vegas, Mr. TB. This is probably one of the more unique trading patterns that I've seen, but I really do like it. Hold on. Yeah, the euro is getting ready to collapse, Bob. That's my opinion. I don't think it's going to go anywhere. But take a look at this pattern. This is the chart of Tesla, folks, and I've happened to be involved with that because my good friend Tom Hugard has been selling Tesla, and I just wanted to show you because things we talk about here, sometimes we don't pay attention to them. But let's take a quick look here at Tesla. Now, this was, you remember when we were looking at the high up there at that 970 level, which was the 1.618 expansion. But just look what's happened here. This is just a 15-minute chart over the last couple of days. And this just shows you that you can actually come in here and look at this. Look at the harmonic number in Tesla. It's $40, and today it's $50. Now we've broken down below $700. We got as low as that. You see the 786 number there on the left? That was our low so far this morning. We were trading at around 706, but it looks like it's going to go. At any time, this thing could just literally collapse. I think that the upside is finished. And the reason why I say that is the fact that we've had, such an explosive vertical move, and now it's come back. We're down from, figure it out, folks, we're down from 970 to 690. We've dropped 300 points. That's more than 30% of the stock in just a couple of days. That is not good. That's not good action. No, I did not. I'm not involved in the Tesla at all. I am not at all involved. Nothing at all. No, I'm not involved in the E-mini. When the E-mini went above 32.95, we'll be able to look at it. Gator's asking a question. Yes, the harmonic numbers are different in different time frames, Gator, because you're looking at the volatility. Because if you look at the volatility of an hourly chart versus a 15-minute chart, your risk is going to be greater. I've just completed a new book with my dear friend John Jameson called the Floor Traders Manual that'll be available hopefully in the near future, where we cover this and a whole bunch of other stuff that'll be very, very interesting. It's being reviewed right now, but I really like it, and it looks really exciting. It's got some statistics in there that are just absolutely amazing. Do you realize that in the S&P that it has a character that if you really break it down and look at it day after day, Monday through Friday, you can see that the character is different on Monday, Tuesday, Wednesday, Thursday, and Friday, regardless of whether there's reports or not. Each of those days has a different character. And when that character is not working, that means to be ready, because it's going to change probably for 2 or 3 days. And that's what's important about the market statistics that we're looking at. But the harmonic numbers, as well as the pattern, they do one thing, and that is they help you to define risk and how much you're going to risk on a trade. Because if you're risking more than one harmonic number, you're risking a lot more than you should, because these numbers work relatively well. And when they don't, that's when the real problem comes in. So let's remember that. Now let's take a look at some of the markets this morning. We've already looked at Tesla with that unique pattern. Here is I wanted to give you a picture of the Dow Jones here on the 4-hour chart. We had this vertical move, folks. This is what you call a melt up. We went from 28,150 to 29,550, taking out the highs of the 17th of January, just a straight up move. And now we're backing and filling right now at this level. We did make a new high by far in the S&P, of course, and we made a new high in the NASDAQ, of course, which is a 1.27 expansion of the last high. So someday this melt up will be over, but right now it's not giving us an indication to place any position at all. So the best thing to do is to sit on your hands and wait for something that is clearer. That's what I would be doing. Let's take a look here at the German DAX, and you're going to see basically the same type of pattern here in the German DAX like we saw here in the Dow, but it has not made new highs as of yet. You can see that little BC swing there, folks. I know it looks clear, but see, I can't count that as a swing. To me, that's a straight up move. The reason why is the AB leg is correct, but there's no BC swing in a ratio. That's not even 10% probably, and I have to have a minimum of 382. Otherwise, I will not count it. That's the difference between me and Elliott Way folks, but that's what I do. I try to keep it as simple as possible. Like Curly in the movie, City Slickers. He holds his one finger up, and what's his name? Billy Crystal says, "What does that mean, Curly?" And at the end of the movie, he says to him, "Do one thing and do it right." And so that's what you try to do, is to keep it as simple as possible, and you'll be a whole lot better. You don't need multiple screens. I know they look really cool and pretty. I've got two 50-inch monitors here, and if I turn them on, it's like being in a sunbathing room. So it's not it's just too bright. I like the laptop. Makes it a lot easier. Take a break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I posted a chart of the U.S. dollar index. As you can see here, this thing looks very bullish, folks. That means that the euro doesn't look too good, but the euro is really holding near the 110 level. It's at 109.95. We've tested it several times. Any close below that 109.60 area would tell us that this thing is probably getting ready to melt down. Remember, the long-term picture on the euro tells we could still get to par 100, which we've been at before. We've been to 62. 82, I believe, in the euro several different times. And from 82, we went to 160. So we could get to par without any trouble at all. So we'll watch that. I think the last on Tesla was around 703, I believe. I watched Tom trade that yesterday. It's really amazing. He sold some at the 890 level, and he doubled up at some other place in there right before it broke 800, and then he did more at 760. So he's got a triple position on with a protective buy stop at 740. But anyway, just to watch him do it, I mean, it's just really it's truly amazing to see how he really presses to the downside. So that's neither here nor there. I just wanted to bring this to your attention so you can get an idea. Another one that looks really interesting that is really starting to look like it's got legs here, and that is the Bitcoin. You notice here we're almost ready to attack the 10,000 level. We've broken above the 78% level at 96.35, and if we get this thing moving, we could really get it going. Now, with the Federal Reserve coming out saying that they're looking at their own cryptocurrency, judge's ruling, where does that come from? So this is going to be hard to believe. So we got Facebook looking at one, and we've got J.P. Morgan looking at one. We've got China looking at one, and we've also have the Federal Reserve looking at one. So maybe these cryptocurrencies will be coming along. We believe the blockchain is here to stay. John Jameson has assured me that that's going to be the case because it's something that will be needed, if not in the very, very near future. One question that someone's asking me is about these astro cycles that I talked about between January the 10th and January the 13th. The last day was January the 27th. That was the top of the market. We had a really substantial break for 4 days. And with the most bearish news that the market could possibly get, with a pandemic possibly happening, the second largest economy in the world shutting down, the second largest economy in Asia shutting down, Hong Kong, and the market explodes to the upside. Folks, when you have bad news and good action, you don't want to be bearish. And this is what's happened. Once we went above the 3290 level in the S&P, that told us that we're probably going to make new highs, and we've certainly done that. How much higher we're going to go will have to be everything. Just remember the three things that Steve is saying: money has to flow somewhere, and that's true. It's just like being a plumber, folks. There's three rules to being a plumber. Remember this: poop does not flow uphill. Two, I can't remember. The third one is payday is on Friday. Oh, don't put your fingers in your mouth while you're working, and payday is on Friday. So it's pretty much the same thing. Is you don't want to be trying to catch a trying to catch a flying parachute in these markets, because it's not necessary. Try to find the easy ones, folks. Look, trade the euro, shut the front door and raise the rent. That's the easy one to trade. And then the second one you could trade is the British pound. And speaking of the British pound, we are sitting at the moment of truth in the old British pound. So let's just take a quick look at it up here. We've talked about this a lot of times, and we are down here again. Let's get up here one more time just to give you an idea, because we're coming into what we call key support. And there we are. We're almost there this morning. So pay attention to that one. And remember, it's taken 10 days to get here. So if we can hold that 129 level, this has got a real chance to have some legs. So we'll be paying a close attention. Regarding that Canadian dollar with that 135 pattern, folks, this is really interesting what's happening here, and it's a little scary, but fortunately they use stops in these markets, so you don't have to worry about that. But the Canadian dollar is setting at the same level of that 135 pattern now for 4 straight days. That is really unusual. One of two things is happening. It's either accumulation or distribution, and we're going to find out here in the next day or so what it's going to be. We are thinking it's distribution, where there's more resistance up there, but it also could be high-level support. And if we break out to the upside, it's going to be pretty bullish, and that would be, in line with what we see possibly in the U.S. dollar happening at that time. We're going to try to have Cy Monley on Monday for a 10-minute segment, talk to us about the farmers, what's going on with them, with all the things that are going on, and I don't know what the David's saying. What do you do when the market needs a rotor-rooter? What you do is you use the old hope and pray method. Don't stand in front of these things, folks. That's one thing that you don't want to do, because the markets can go farther than your equity can take you sometimes. So be really careful of that. Yes, Ruby, I'm glad you mentioned that. I wanted to talk about coffee because it has literally broken down very badly. We were worried about that at 110, but let's get it up here because it's trading now down at a really, I think it's 94 or something today. It's just literally didn't hold that level. Let's get this up here so we can see it. You'll look here. You can see here that the 618 failed there at the 110 level. It stayed there for 3 days, and then boom, down it went, and then we're below the 78% level. Now we're down at the double bottom here almost at 96. This market is a falling safe, folks, and this is what'll happen to the stock market someday. Maybe not in my lifetime, but that's probably what will happen here. We'll see. What is CAH up 9%? I don't know what that means, David. Could you tell me what CAH is? I am not sure what that happens to be. So, It's Cardinal Healthcare. Okay, healthcare. Yep, that's always good. Everybody needs healthcare, that's for sure. All right, let's move on here to take a look at some of these others here. Coffee is at 98.65 now. Okay, so it's held that 96 level a little bit, but I don't know. It doesn't have a bullish pattern here, much like hogs. I mean, hogs haven't done much, but there's still nothing there that I can see. We'll have to be able to see. Okay, Maria is saying that we might have a small ABCD at the 3331 in the E-mini S&P. Is that on your 22nd oscillator, dear? That's a little joke here. 100, 100 in coffee. Hold on a second here. Let's move on to the next one here. Let's see what the markets are doing here. We got to take a break. I'll take what the markets are doing, and then we have our good friend Mr. Norman Winsky of Astro Trends will be on, and he will be giving us some really good information, talking to us about fractals, and we'll be able to see that.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks, and we have on the line Mr. Norm Winsky of Astro Trend. Norm, you have the mic. Why don't you take off and start your show?
Thank you very much, Larry. Okay, I thought we'd review a couple important cycles we had in the last week of January, which was, we'll see, were very important and are very relevant to what's about to happen over the next several days. On the weekend of the 24th, we had a new moon in the sign of Aquarius, and we'll be looking at financials, greens, precious metals, and copper. And then you'll see, probably even more important, is over the weekend of the 31st, we had Mars at 0 south latitude, and that's when the planets get to 0 latitude. That's very important, and well, I don't want to get ahead of myself here. Okay, so let's see how that worked out I think the Mars cycle is a 2-year cycle, so I think in some cases it overwhelmed the moon cycle. As you see here on the copper, I was looking for a possible turn on the copper. There's the red arrow there, and the weekend of the 27th, and it didn't work very well. And then failed, but went down and made its low on the Mars point there over the weekend of the 31st, and then that was the bottom. Here's corn. Corn, the low bar, had a low bar there on the with the moon on Monday the 27th. Here's your gold. Gold, you had a little short-term top there on the moon on the morning of the 27th, and there we had the top there on the Mars point over the 31st weekend. Here's silver. Silver did pretty nicely. There's the moon there on the 27th morning of the 27th, and again another top on the Monday the I guess that was February the 3rd, right? Coming off of the Mars point there over the 31st. Here's your soybeans. Soybeans didn't seem to care about the moon. They just kept going down. Actually made a low there. Wasn't expecting that. Some of these surprised me when I put this together. That the things that I usually look at for the moon, the beans preferred the Mars point over the moon, I guess, Here's the S&P. We responded to these points very, very well. You had a short-term low there on the Monday, the 27th, and then a rally, and then back down. As you know, they had the sharp down on Friday the 31st into the Mars point, and then we turned around, and we've been going up ever since. Keep that in mind, because there's things that we got some things coming up here in the next couple days, 1 to 2 days, that could reverse the current trend now. Okay, here's sugar. I was surprised when I took a look at sugar. It made a low there right on the moon on the morning of the 27th. Here's bonds. Bonds didn't care about the moon, but did make its top right on Monday, the February the 3rd. And there we go. Here's the dollar, went 50-50 again with the moon was just kind of so-so. It topped 2 days later, a little bit higher. But then it made its low right on the Mars point there on February the 3rd. Here's your British pound. Literally was just talking about the pound. And there you made a little bit of a short-term. You missed that little top there on the, but still within range where you could have sold it there for down a couple of days and make some money. Then it rallied back up for that Mars point on the February, kind of topped, made the highest high on the 31st, but you still could have sold it on the opening of the February 3rd, be very close to the high there. Here's yen. It responded to the moon, made a short-term top there, then went back up, made a higher high on the Mars point, and then sold off sharply. So here's what's coming up next. We have, keep in mind, I got to give you the overview here. This month, I think we have 5 planets all hitting 0 latitude, and I don't ever remember that happening before. It's huge. That's one of my top things. That and planets going direct and retrograde. And guess what? We have that too. So this is a very unusual month. Usually the market reverses direction when it hits these points. So I'm expecting a big whipsaw month where we have sharp up and sharp down, sharp up. I think before the month is out, we'll all be going crazy, All right, here we go. We got tonight. Tonight's the night, the 6th, AC after the close. Mercury at 0 north latitude. Watch for major change in trend for the grains and the stocks. Then we have over the weekend coming up, we have a full moon. And so you got your grains, precious metals, stocks. And because it's in Leo, we'll be watching for the gold, especially gold and OJ. And then next week on Abraham Lincoln's birthday there, the 12th, we got Saturn hitting 0 south latitude. I think that's like a 30-year cycle. And that's why one of my Saturn is coffee. So watch for a big turn in coffee next week. Next week is coffee week. We also have Mars entering Capricorn. That's the sign for coffee. Again, all around the 12th of the month. And that coffee is featured then. Then at the end of the next week, we have Venus hitting 0 north latitude. There's another big point. And it'll be over the 14th weekend. And then we'll be looking at your Venus markets that are cattle, copper, cotton, and of course stocks is always involved in everything, and then sugar and wheat. And then we have over the 14th weekend again, we have the moon's north node is going to the U.S. natal chart. That's a very positive cycle. So we got some sort of cross currents here. We have major negatives, major positives all happening, and we could get some fast whipsaws there. We also have here's another U.S. aspect, and so we have that, and then if that's not enough, then over the 14th weekend we have Mercury turning retrograde in the sign of Pisces. We'll be watching the grains and oil and stocks. So here's some of the markets I did cover in the review. Here's the cattle chart coming up for next week. We're a little bit ahead of the curve here on these. There's your cotton chart. Here's your coffee, as Larry indicated. It's been going down, 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 all these charts as of last night. And now we're going to look ahead. Now we're going to talk about the fractals. And here's the fractal for last year. It's also called, for the stock market, it's called the January barometer. This has been around Wall Street for decades. As January goes, so goes the year. So I got inspired to do that back in the early 80s. And I've been doing it ever since. And it's sometimes very amazing. So the blue bars are what happened in January. And then I stretch that out for the year. And then at the end of the year, this is for last year, overlay the actual price on top. You can see that's a pretty good correlation there. And here's something really interesting. When it diverges, like right there, that point right there where it tops, and the blue bars top in August. And if I scroll straight down, then you're looking at it. Pretty good timing for a low there, you see. So even when the direction is inverted, it often gives you good timing. Here we go. Here's this year. And there we go. So we want to go up, up, up. And that's what we did. We rallied into the third week of January. And then we had a sharp down. And now, because we closed under where we started the year at 3230.78 on Friday the 31st, that also had ramifications for the Super Bowl. So the Super Bowl indicator is that if the NFC team wins, that's bullish for the year. And if the AFC team wins, that's bearish for the year. But these
pay a few bills.
Yes, sir.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Norm Winsky. You want to continue on, Norm?
Yes, sir. So we were talking under the broader category of fractals and how they apply to the stock market. And we have two fractal type models. We have the January barometer. As January goes, so goes the year. We take the January price action, apply that to the year. Or you can also look at the Super Bowl indicator. If the NFC team wins, that's bullish. AFC team wins, that's bearish. But these models work even better than anybody can imagine because they're supposed to only forecast the end of the year. But in fact, I have found that they actually are a forecast model for the entire year when the ups and downs during the year. So here's your January barometer is forecasting a big turn in August. You can see we also have an important time coming up here right now. Okay, so there we go with that spike there. And so we'll see how that works. This could be inverted. Some of the fractals often are inverted. So if we start going top out here and start going down, 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 then you may not be looking at a low until August. But the primary forecast is we're going to have a rally to new highs in the late summer and then go down to a lower low by the end of the year. Now, the Super Bowl indicator, it does the same thing, but here's the exciting part. We always know the answer to this forecast. And by the way, the January barometer has a 75% win rate. And this is not my numbers. A few years back, somebody did a statistical study going back to 1950, and it was right 75% of the time. The Super Bowl indicator is even better at 80%. So, these things predict the same thing. They're predicting what the market's going to do the stock market's going to do for the coming year. So here's the exciting part: the January barometer is always done. In recent years, always done before the Super Bowl is played. That means maybe we can use this analog to predict the Super Bowl. So here's what happened in January. We went up, up, up. That's bullish. That would imply that the NFC team is going to dominate the game for the first, say, 3 quarters of the game. And then, but because it went down and closed below where we started, that would imply that the AFC team would come back near the end of the game and win. And that's exactly what happened. The 49ers dominated most of the game until the fourth quarter, and then the Kansas City Chiefs came back to win the game strongly. Okay, pretty interesting, huh? All right, so now by the way, I do this kind of fractal thing, not the kind of thing, not the Super Bowl, but the January barometer type thing for 27 different markets. If you're interested, get a hold of me. I'm going to be doing 20 for all the markets there coming up in the coming week. All right, here's my day trading. I have these planetary times. There's the moon doing the different stuff, and there's geocentric from the point of view of the Earth. I do heliocentric from the point of view of the Sun. And I also use the U.S. natal chart. Here's a trade I had yesterday, at 9:43 a.m. Eastern time. We had the moon making an important angle to where Pluto was on July the 4th, 1776. Let's go look at the chart, see what happened. Oh, look at that. There's a nice low right there. We went long at 33.1850, and in the next 7 minutes, it went straight up, and we made about, I think, 6 1/4 handles there in about 7 minutes. And didn't risk, only risk $100, 2 handles to do that, okay? So there we go. If you want to day trade, I can show you how to do that. I got a free day trading class. Here's how to get a hold of me. Here I am in Naples, Florida, sunny Naples, Florida, 239-594-3939. There's my email address, nwinsky at embarkmail.com. You can call me on Skype. That's nwinsky_digit1. Any questions, Larry?
I think we're doing okay now. One question is the movement of these planets in retrograde motion. Has that had any effect on the market that you can ascertain?
Well, what I do is I look at them at their station point. That's where they stop. From the point of view of the Earth, it looks like they stopped and then reversed their direction. And Mercury will be doing that over the weekend of the 14th. So that'll be the next one to watch. Just for example, I just recalled back about a month or so ago, Uranus turned direct in the sign of Taurus, the bull. Go look at your cattle chart. That was a big top, I believe, in the cattle.
Okay,
so that's pretty nice, right?
One other question, Norm, and that is, do you look at anything that the Federal Reserve does in your analysis?
No, that's after the fact. You're getting that information late. Why do I want information that's maybe a day or two old, or I'm getting information here ahead of time. I send these times out to my clients weeks in advance. They got this.
Okay.
They got today. At the end of January. I got the whole month laid out.
Okay, that makes good.
I think the planets are influencing the Fed, not the other way around.
Okay.
I don't think the Fed has much control over the planets.
All right, Norm, we have could you tell the folks how they could reach you? Could you give them your phone number and your email address and your Skype name, please?
All right, my phone is
posted in the room, but go ahead.
My phone is 239-594-3939. That's 239-594-3939. Operators are waiting. That's a joke. nwinsky at embarkmail.com. That's NWINSKI at embark, EMBARQMAIL.com. And there you go. And my Skype is nwinsky, NWINSKI _1. And Larry, Nwinsky is Polish for winner, right?
We already knew you were a winner. You didn't have to. You're a winner in any language. That much we know for sure. Hey, thanks for joining us today, and we'll have you on again soon. Now, when is we've got a full moon coming up here pretty soon, don't we?
Right, this weekend. Sunday.
This weekend. It's on Sunday. Oh, okay. That'll be the 9th of, I think isn't that Reagan's birthday, the 9th of February? It used to be.
I
thought it was something like that.
I think his birthday
might have been. I know it's early February.
Anyway, let me just summarize on the stock market here because it's been going straight up. I think we might top out here by maybe Friday because you take the average between the Venus and the Mercury point that we have tonight and the moon over the weekend. I think we might get a top here on Friday. Watch for it. Should we get there, not saying we will, but should we get to the 3364 area, that could be important resistance because that's a square number, and we've seen in the past where the S&P tipped its head here at these square numbers. I think the last one was right around, I think it was 33, 34, somewhere in that neighborhood there, and we stopped there within a few handles. And so there we go. So watch the 3364 area. I think we could get a top here maybe in the next 1 to 2 trading days. I'm leaning to Friday. And then we could get a sharp down into Lincoln's birthday, speaking of presidents, on the 12th. And so Saturn, that's a 30-year cycle, Larry. Saturn on its 0 south latitude. South is considered negative. North is considered positive. Obviously, these don't always adhere to the rules, but there you go. I think we're going to have a little whipsaw month, big whipsaw month, straight down moves. Definitely need to be using stop losses, that's for sure, right, Larry? Yep. Don't get in the way of this stuff.
That's what I'm looking for. Listen, thank you for.
Hello. Are you there?
Hey, listen, thank you. I'm here. I just want to say thank you for being on.
Okay, well, thanks for having me on.
10-4.
Everybody have a great day.
You bet. Norm Winsky. You bet. Norm Winsky of Astro Trends, folks. 877-927-6648. Before the, what do you call it? The Alliance Light Up Trust or whatever.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart here of the NASDAQ. This is a 15-minute chart. You can see we've had a really nice Gartley down there at 93.62 and promptly rallied 30 handles. If you'll notice, Maria posted today 33.31 in the S&P, and it's spot on, just bada bing, bada boom, and that has a nice profit in it. Just make sure that those don't go below those levels now, because if it did, it would be a failure. So keep in mind that being in the TFNN has a lot of advantages because there's some really smart folks in there, folks, and they really give you some good information, as well as the speakers that we have, all the way through Tom, Tommy, Steve, oh gosh, just everybody, David. Oh my gosh, the master himself. Basil Chapman. Anyway, that's what we're watching here, folks. So keep in mind, we're going to have incredible volatility. You can see how the VIX is held up during this time. So that's telling you some big things are happening. As far as the virus thing, God only knows what's going on over there, and she's not talking about it because the news that you come out, you have to be really careful of what's going on in the news anymore. That's on both on the good or the bad, because you just never really know whether they're telling the truth or not. Singapore, that's not a problem, because if you do bad news in Singapore, you get 10 years in the big house without too much trouble. And also, let's say some prayers for some people that are pretty sick, especially Rush Limbaugh. I happen to be a big fan of his, been listening to him for years. He's a really nice guy. I've met him a couple times at fundraisers for Reagan back in the years when he was running for governor and he was just getting started. But he's just a super nice guy. And he's actually very, very humble. He's just an incredible speaker. Can you imagine being on 3 hours a day for 30 years? Do you know how hard that is? Holy cow. Terre Haute, Indiana, about the only place you can have lunch anymore is at my cousin's restaurant, Casa de Pesavento, there on South 7th Street. It was converted from a rock and roll place where I used to dance when I was a little shaver, 11, 12, 13, 14 years old, when Elvis was getting going along with the boys from Nashville and stuff. But they turned that place into my cousin. He's my aunt's son and grandson.